Hello, good morning to you. Welcome to Business. Now, the expected interest to be paid on the energy sector bond has raised some questions about the impact on the cost of borrowing in the country. This was after managers agreed to pay 19% as interest on the 7-year bond and 19.5% for the 10-year bond, which would now be closed this Friday. George Viafe has more on this and why managers could not raise the entire amount targeted over the past week.
Depending on whom you will engage in the financial space, the views might differ. Whilst some believe that the rate settled on may set a new benchmark rate for borrowing in the country, others disagree. For those who think that it would impact on the cost of credit, they argue that since government sponsored the ESLA PLC bond, interest being paid should be seen as just like any other government paper. So if you should go by the theory that you wouldn't get more better sovereign than your government, then what is being paid on the ESLA bond, which is about 150 basis points higher than the current interest on government's 7-year bond trading on the Ghana Stock Exchange, then that would definitely set a new benchmark. However, others believe that there is no way this rate would impact on the interest of cost of credit in the country. They argue that since the ESLA paper is not a government bond or a strictly corporate bond, there is no way this would impact on the cost of credit over a 7-year period or even 10-year. On the possible reasons for not getting the entire amount, some of the experts that Joy Business have engaged were of the view that the price that was offered was not enough to compensate for the risk associated with the bond that was not fully backed by government. This is because the gap between a 7-year bond and the 10-year bond was just about 0.5%, which some say was not enough. Again, the difference between the 17.5% on the current government yield and this bond showed that investors were asking for more compensation. Managers of the Standard Chartered Bank and Fidelity Bank last Friday managed to raise all the amount targeted in the 7-year bond, but had some challenges in getting all the 3.6 billion cedis targeted 10-year bond, resulting in an extension to this Friday.
And away from that, government is to develop a petroleum infrastructure master plan to serve as guidelines for the location of strategic petroleum infrastructure in the downstream sector of the industry. Over the next 3 years, the master plan will facilitate massive deployment of petroleum infrastructure as government tries to develop the downstream petroleum industry. Now, government is currently enforcing stricter regulations in the downstream petroleum sector. Deputy Minister of Energy Dr. Mohammed Amin Adam says petroleum master plan would go before cabinet for approval before the end of the year. He was speaking at oil marketing company GOIL's 2016 Dealers and Trade Area Awards, which was held in Accra over the weekend. We'll bring you details of this story at midday. My name is Emmanuel Abuaji. Have a good morning.